let's kind of move into the core discussion. I'm curious, kind of what are the sort of 2 or 3 major kind of 5 to 10 year themes that you're most interested in kind of digging into? You know, when you go to the desk in the morning or wake up in the morning, what's really got you jazzed up in terms of what to dig into as major profit opportunities over the next sort of 3 to 5, 10 years?
The three to four big things that I really see. There's a death of macro going on right now. Bonds, you know, we're screaming because bonds are at 1.6% and this is too high, right? So therefore, we're going to be bound by 2% on the upside, minus half on the downside, you know, minus 50 basis points on the downside. There's no market. It's a cyclical trading market. The FX markets, yes, there is some movement, but generally I think people realize that the dollar, which is the big daddy of everything, 88% of world trade, cannot be allowed to move too far up or too far down. So it's been in a range for the last 5 or 6 years, up and down. So that leaves us with very limited opportunity sets in that kind of global macro world. Credit is also pinned lower. So what's interesting, you know, well, equity markets are all-time high valuations. We can talk a bit about that later. But there are some big themes out there that are super interesting. One is the massive rise of digital assets. There is a parallel financial universe being built in front of our eyes, and people are slowly migrating across. People have no comprehension yet of how big this is. They're still bickering over, is Bitcoin an investment vehicle, without realizing the magnitude of what is actually going on. That's one. That's the biggest theme. It will remain probably the biggest theme that any of us have ever seen. And I talk about it. It's a supermassive black hole. It's making my job very difficult to even care about anything else. You know, if I look at Bitcoin, it's up 94% year to date. Ethereum is up 140% year to date. I mean, it's left everything in the dust. It left everything in the dust last year, and it'll continue to do so. And there'll be some cycles in it, but it makes all other returns worthless in comparison. So that's the super powerful trend. There is a trend that will develop. I'm not bearish on the dollar. I actually think it goes higher for a bit. But I do think it's stable. I think the central banks, the Bank of International Settlements and others don't want the dollar to move much. And in that case, a stable dollar is very good for emerging markets. There's a technological revolution going on where countries that have aging, crappy old infrastructure can walk straight into a new digital world and gain huge productivity without the cost of a legacy system, because theirs is so out of date anyway. So that's very bullish. Countries like India, North Africa, tons of countries. And so I think those assets are wildly underpriced versus developed markets. And that trend of, let's say, the US versus MSCI World is the most stretched it's been since 1954. So it's incredibly cheap. I like that a lot. Demographics are better, debt profiles are better, all of the macro problems don't exist so much there. I think there is a secular theme to be traded, which is the rise of green investing. I think everything from green tech to just the fact that the regulators are forcing investors into this space, forcing regulation, forcing things like the cost of carbon to increase. I think that's a very powerful trend, and I think there's a lot of money to be made out of that. And overall, I think there is a continued rise in the disruption of technology. It's a secular theme that I think is very, very big and investable, and it will outperform over time, even though it's wildly overpriced right now. You know, if we're talking long-term time horizons. So those are the things that really capture my attention, that I think more, I spend more time thinking about than anything else. You know, I kind of am finding it difficult to care about bonds or even currencies or most equity markets. You know, these are some really big, important, massive return drivers that I think most people aren't truly properly focused on yet.
So I think the crypto or digital asset discussion could like you say, be a black hole that swallows this entire conversation. So I want to sort of press pause on that, because actually Mike and I are super interested in that personally, and agree with your assessment of the potential there. But I think we'd love to learn a lot more about it. I'd love to sort of try and triangulate a couple of your themes against another theme that is, I think, rising to the top of people's attention just in sort of the general financial zeitgeist. And that is, you mentioned the role of technology, both in allowing, let's call it like deeply emerging markets or very early stage emerging markets to sort of leapfrog the expensive, sluggish like legacy assets that all of the developed economies are saddled with, right? Like the entire global financial system runs on the back of 1960s IBM AS400s that you need, Fortran programmers in their 60s and 70s now to be able to maintain, right? So, I mean, you've got this is one example, right? So you've got all these countries that are able to leapfrog that, and that's a huge boon to productivity. And productivity is by its very nature disinflationary, right? And then just in general, sort of technology as a theme, if software eats the world, then that is also extremely disinflationary, right? And then you've also sort of said, just within the bond segment, we're probably range bound, right? So you're not really looking for a major break higher, like a long-term trend break higher.
Because the super cycle of debt is deflationary.
Right.
Because, if rates go up, spending goes down. So we're in a hugely deflationary cycle.
Right. So the inflationary impulse that we're observing, your thesis is that this is transient?
Yeah, it's just cyclical. It's cyclical based on supply disruptions and demand coming back on. So year-on-year comps are going to look good. And then the economy is going to settle back down, even with the rise of fiscal stimulus backed by the central banks. I don't see a way around globalization, technology, aging demographics, the massive amount of young people that have gone into the labor force at the same time as the baby boomers. There is no way of generating wage inflation on a broad basis. And now we've just laid off a bunch of retail workers who will never get jobs back again. Structurally, I do not see a way of creating classic CPI inflation. Monetary debasement, that's a whole different issue.